Hey guys, welcome back to the channel. On today's video we're gonna go through one of my absolute favorite indicators, and that is the 30 daily moving average. I actually think that this one is one of my secret tools for my trading system. Is such an amazing high probability moving average, and we are gonna go through all the details about that moving average in this video, so make sure to stick all the way to the end. And also guys, if you find this information helpful, make sure to like, subscribe, and also share that information with other fellow traders. And also make sure to follow me on my Twitter account. In that Twitter account I share a lot of information about my setups, about my style, and of course I share a lot about information of my trading tools. And one of those trading tools that I already shared a couple of weeks back is actually the one that we're gonna cover on this video, the 30 daily moving average. So once again, thank you guys for being here. So let's just go directly into the charts and start exactly asking the question, what is the 30 daily moving average? So the 30 daily moving average, in this case the simple daily moving average, is basically just the average of the last 30 days of price. So if you want to calculate this moving average, you just have to look at the price action that we had in the last 30 days and basically just get the average of those closing prices, and then you will get, of course, the moving average that we're gonna take a look today. So let's just jump directly here into the SPY, and this is one of the most recent price action that we had this year, right? So this is basically the price action that we have seen since the month of September 2022 all the way to basically today, when we had a lot of selling. So going back into the 30 daily moving average, if you see this naked chart right here, you're basically just staring at a lot of chop, right? We have price moving up, price moving sideways, price breaking down, price going up, price moving down, basically just a lot of chop. Now what if I tell you that one moving average is actually a very effective way to find some tradable trends even in this very sideways market? That will be really interesting, right? So let me just plug here my absolute favorite moving average, and that is the 30 daily moving average. Now when we take a look at the moving average here, you can see right now that we're not seeing a lot of erratic and crazy price action. We're starting to see a little bit of short-term movements and some tradable trends that actually lasted for a couple of weeks, both to the upside, right? Both to the upside and both to the downside. So this is actually really interesting. So now let me just get here some of the drawings that I made. And let's start here with what is actually the primary purpose of the 30 daily moving average. At least, how do I use and incorporate this 30 daily moving average into my system? So the primary purpose of the 30 daily moving average is to identify high probability levels of support and high probability levels of resistance. And this way we can use these levels of support and resistance to start building bullish or bearish positions to follow what could be a short-term trend or a little bit of a longer-term trend. So let's take a look here. You can see right here that the SPY found resistance right at that 30 daily moving average. You can also see here that we find some resistance at the 30 moving average. As soon as we reclaim that level, we move to the upside, we come back down, and we find support right at that 30 daily moving average. Then we have a tradable move to the upside, and let me just erase some of these arrows here. You can see that we have a tradable move to the upside that lasted a couple of weeks, going into almost a couple of months, right? And then you can see that we found support there again, and as soon as we lost that level, you can see that the SPY gapped below that 30 daily moving average. You can see that we had a little bit of selling, then a little bit of accumulation, and then of course we find a little bit of resistance here again. But as soon as we pop above the 30 daily moving average, that happens to be again support. Then we had another tradable move, and now you can see that on the selling that we have seen since February going into March, you can see how important is this 30 daily moving average. You can see right here that we got below something very similar to this day right here. We had some selling, we came back here, tested that 30 daily moving average, and now we're seeing some movement back to the downside. So it's actually pretty interesting to see that this 30 daily moving average, by respecting this level, you can basically position yourself in the path of least resistance of the price action, going into a little bit of a more medium to longer term, talking about weeks, talking about swing trading, which is basically what I do. So this is actually a very, very important moving average. Now, why is the 30 daily moving average so important? This is very, very important to understand. And this comes to, if you haven't read, I really recommend this book. This book is by Stan Weinstein, and this is the book about profiting in bullish and bearish markets. It's a really, really amazing book, and I actually recommend that a lot. And he talks about something that is called stage analysis. So let me just go back here into this very important image that I have in Amazon. This is actually a weekly chart, and this line right here is actually the 40 week or the 200 daily moving average. I know that it seems that those moving averages have nothing to do with the 30 daily moving average, but hear me out. So Stan, he talks about the market moving in stages. So as you can see right here, we have stage number 1, which is the accumulation stage. This is the moment where institutional investors, smart money, they start accumulating shares because they consider that the valuations are appropriate for their time frame. So they start accumulating those shares. Then on stage 2, we have the advance. You can see that price start to move to the upside, and then of course we have stage 3, which is the distribution phase. In this phase, investors and institutional money and smart money, they decide that the valuations are no longer at prices that they are willing to hold, and they start distributing the stock. And then of course we have the decline, which is stage 4. Now, I'm not sure if you're familiar with the I'm not sure if you're familiar with the term fractal. Basically, fractal means that the same trading strategies and patterns can be applied across multiple time frames. Now, if we go back to the 30 daily moving average, the 30 daily moving average, going back to our chart in the SPY, the 30 daily moving average very accurately recreates the 200 hourly moving average. What do I mean by this? I mean by this that the moving average, the 30 daily moving average, recreates the price action of the 200 hourly moving average. So now, if we start thinking and we go back to the chart in Amazon, this is the 200 daily moving average. The 200 daily moving average is a very important level for identifying stages in price. Now it makes sense that the 200 hourly moving average will also be an important moving average to identify stages in the price action, but in a short-term time frame. So now it makes sense that we're gonna see the same kind of movements around the 30 daily moving average. So let me show you what I have right here. So let's go back to the chart in the SPY. And this is something very, very easy to understand, but it's crucial for us to understand. So it makes sense that we're starting to see distribution right here, and then we see the decline stage, which was stage 4. So now, as the 30 daily moving average catches up with price, it makes sense that we're gonna see accumulation, stage 1. As soon as that 30 daily moving average, which is the 200 hourly, act as support, it makes sense to see the next stage, which is the advanced stage. And then it makes sense to see distribution, and then of course see the decline. And then it makes sense again to see accumulation, advance, distribution, decline. And all of this price action happens around the 30 daily moving average, which is the 200 hourly moving average, which then of course makes sense because that same moving average, the 200, is exactly what Stan talks about in his book. He talks about, and mostly in most recent interviews, he talks about the importance of the 200 daily moving average. And now going back to the fractal nature of the market, we can start applying those same things going into a different time frame. So I hope that that makes a lot of sense. It's actually a pretty interesting concept, and it's not a hard concept to understand. It's actually pretty easy to come across, and then start to make a little bit of adjustments and creating a more important model for our understanding about the market. So that's actually what I think this is one of the most useful moving averages in the market. So now, what could be the strategy around this moving average? And actually the strategy will be really easy, right? The strategy will be when the price violates or basically breaks down the 30 daily moving average, then we're gonna look for any retest of that moving average as a confirmation that we're probably gonna find resistance. And then of course shorting near that moving average if we're trading bearishly, and then basically just trailing our stops using that moving average if you want to hold things for a little bit longer. And then of course when price moves above the moving average, looking to find support at the moving average. And then of course when price breaks it, we're gonna then trade to the downside, and then basically just repeat the cycle. And you can see that it has been a really important and successful way of trading. So what is the most effective way to incorporate the 30 daily moving average into your system? And it's actually just understand that the 30 daily moving average can be seen as an entry level to buy the dip, or basically just to short the rip. And it's fascinating how this 30 daily moving average has been something that is something that we can use in basically a lot of financial instruments, including future contracts, stocks, cryptocurrencies, and many other things. So I think that is actually pretty impressive how this is one of the most effective moving averages, and a lot of people doesn't use it. A lot of people don't look at the 30 daily moving average. So I think there's a lot of edge on understanding how amazingly important this moving average is, and how amazingly effective it is to keep yourself on the path of this resistance. So I want to make this a very short and sweet video, guys. I think it's really important to understand. We don't have to complicate it much, and I'm sure that you are gonna find a lot of value. And I ask you to just try the 30 daily moving average by yourself. Try it and just make a simple rule that if something is trading below that 30 daily moving average, you're either not gonna buy it or you're gonna short it when you have a rebound to resistance. And if price is above that 30 daily moving average, then you're just gonna go with the path of least resistance, buy the stock at levels of support, or if you have patterns, and don't short the stock when it's above that 30 daily moving average. So once again, thank you so much, guys, for watching, and I will see you on future videos. Take care. Bye bye.